Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers.
Cryptocurrencies were all the craze during the MCO period in Malaysia. A lot of millionaires were minted, and on the flip side, many lost their entire life's fortune too. Crypto is back in the headlines again today, all due to one thing, which is the crypto ETF, starting with Bitcoin ETF. Now that crypto has matured and there are more regulations around cryptocurrencies in general, does it make cryptocurrencies a better or even good investment today? Welcome back to WangHiro with me, Louis, and my co-host, John. We talk about personal finance and investing on this channel. On today's episode, we ask, is cryptocurrency worth investing in 2024? So, John, what's your experience with trading cryptocurrencies?
Horrible. Horrible. No, that was just a clickbaity kind of response. But yeah, maybe I start off when the early days when actually Bitcoin was invented way back 2008. Satoshi Nakamoto wrote that white paper. I mean, I'm not going to go through the history. You guys can research it well enough, and I'm not going to go through all the philosophies behind it because there's too many. I would say the narrative relates really around empowerment, decentralization because of the 2008 financial crisis. But more importantly is I actually love the technology, the blockchain technology was creating, because I looked at it and maybe I highlight one that gives a very use case. So have you heard of this company called Maersk, if I pronounce it correctly? Maersk. M-A-E-R-S-K.
Yeah. Is it the freight company?
Yeah, it's the freight company. Every time you see containers and all that. Okay, so let's imagine for a second that you have bananas in Boulevard shopping mall in Miri, and that batch of bananas is found to be contaminated. Okay, so how quickly it is for anyone, including that supermarket that bought it, to actually trace back all of that to a particular batch or a particular shipment. It's going to be quite nightmarish, to tell the truth. Okay,
I don't think it's possible.
Yeah, exactly. I mean, and how you're going to label them? It's not like every single banana has an RFID tag, right? For example, right? But there is traceability on probably the boxes, the packaging, and all that kind of thing. Now, even with a computerized system, there's different version controls. Maybe one guy is sending an Excel spreadsheet, another guy is sending in a PDF, and all that kind of thing, all right? But because of the double ledger system, the immutable record keeping and all that, I mean, part of the blockchain technology, it is actually very, very possible. Now, the problem is this: it slows down the network because everything has to be replicated around everyone. Now, that actually got me very much fascinated with also the technology behind it, the use of the currency use case and all that, but speed was their detrimental point. So when I started, it was roughly about 2017. Actually, I read about it because I like to read fortune. So by 2009, 2010, I already started reading about the technology, but there was no guidance on how to buy. You know, it was usually, I don't know about you, whether you have friends who bought early way back in 2000, even 2015, I think if you bought, it's quite early, you know. Do you have any friends who?
Yeah.
Especially those computer nerds, right?
Yeah. He happens to be working at CoinGecko right now.
Okay. So the CoinGecko guys, the Etherscan guys, we'll talk about them later. Okay. Actually, these are the two most profitable crypto companies in Malaysia. And here we have, it's so funny, Louis, we just 2 nights ago, my friend and I, a few of us who are investors, we started talking about this, and we said that how many people got burned, but how many people also Malaysians also made a lot of money from the CoinGeckos and the Etherscans, right? So again, my personal experience, I started buying BTC roughly about 2018, Litecoin. I think when I started, Bitcoin was about 9,000 to 10,000 US dollar per one Bitcoin. Okay. The lowest point I bought, and I remember this because I swiped using my credit card.
Wow.
Yeah, there was an exchange that time that allowed credit card, and we didn't know. But you know what the credit card company did? It was a very painful lesson for me. They charge it as a cash advance withdrawal. So I had to pay, I think, quite hefty fees. Yeah, it is considered as if you cash advance from your credit card. But we were just experimenting. We wanted to know how it
Okay.
works. Yeah.
Ooh.
Yeah. But I bought it. I because of that, I was like, wow, very sad initially. But then I bought Bitcoin at that point of time, $4,000.
4,000.
4,000 US dollars. So again, that's why in investing, there's so many factors, ma. It's like your transaction cost may be high, but you got it at a low. So then it offsets or negates. It's like Forex, ma. I started my US investing 3.85. And today people are complaining about 4.6. I said, hello. you know, I put in roughly about 5% of my net worth at that point of time. Then it went up all the way to about 16 to 18% of my net worth. And I got quite wiped out during the Terra Luna crash. In excess of 6 figures, put it this way.
Wow. I mean,
Yeah.
what I mean, you sound to be like the tech enthusiast. You were very interested in the technology around Bitcoin. But I'm sure there was like some level of greed and hype.
Oh, definitely. It was definitely greed speaking.
Mm.
I think the other mistake that I made was relying too much on other people's research. So that in itself has a whole lot of one whole episode of content again. I'm not going to go there, but I think two things are, if you were to draw from my mistakes and my learnings, one is actually three. One is trust yourself, trust your own gut. The first one. Second one, don't rely on other people's research or whatsoever, because you will contradict your first one already. Your inner gut usually tells you. The problem is we always suppress our inner gut. We like to use logic. And when you have logic, that's where it gets clouded by other people who sound smarter than you, but they're actually not, Okay. And the third thing is this. Whenever you want to do something that you are unsure of, never put in money that you can't lose sleep over. So for me, it was 5%. And if I look back, I actually started off with about 100,000. And if I just kept it at Bitcoin, at the probably semi-peak of Bitcoin alone, that 100,000 was worth about 700, 800,000. Just Bitcoin.
Can imagine.
But then I started going into alts, right? And yeah, I wouldn't go into detail of how it is, but I got wiped out nicely.
Yeah, I mean, when you touch on all of the rest, because everyone is trying to, at that time, I think everyone is trying to find the next Bitcoin, right?
Yeah.
Or what is the next Bitcoin? Then, I'm going to make like even more, like a million times more or something like that. So, yeah.
Yes. How about you, Louis? When do you started buying? How much money you put in and all that?
Yeah, I started buying relatively late, and my brother was the one who really like introduced me to it. He's like he looks into the tech stuff. He's very good at all these kind of things. So he was like, oh, you know what? He was telling our family members, all this is a very good time to go in, and at that time I put about 12K, not much. So it was just like a tiny amount of money that I felt like, if I'm gonna gamble, I'm gonna just gamble this amount. Very, very careful. I don't dare to do more than that. So I think at the peak, I think around the time that your 100K became 600K, it peaked around 80K. The 12K became around 80K. But in the end, I didn't sell it. And then I was wondering like maybe it would go higher. It's always the feeling of maybe it will go higher because, it used to fluctuate a lot, right? It was very, very volatile. By the end, I saw everything. I just felt like, you know what, I should stop investing in something I don't understand. Yeah. So I thought, okay, maybe one day I'll come back to it when I understand it better. Yeah, but I still made money from it. Like it's just not a significant amount. Maybe like 2 or 3 times more only. My friends made millions and millions because they, on top of like buying this, like they were also into NFTs, buying and selling NFTs, that kind of thing. So I've seen people literally go from like we are all in the startup entrepreneur community. All of a sudden, after the whole MCO Bitcoin craze,
Mm.
he became an angel investor.
Mm.
Became a millionaire. He bought a huge house, everything. He's still rich today. So so it started to invest in a lot. So there is that flip side. And the other end of things, I've also had some friends with just a small amount of money also lost everything. Yeah. So it's to me, when I look at these statistics, right, I feel like, wow, it's really gambling lah. I feel like I just went into the casino, came out, someone got rich, someone really lost a lot of money.
Yes.
So as we look at this, right, we see, okay, during that time, the crypto price go up and down very fast. Now less so, but most people who want to invest in crypto, obviously they want to understand why this price actually goes up or down. What do you think about that, John? Why does it move? What moves the price of crypto?
Okay. Having observed the great flush, put it this way, the great flush means all these outs being flushed out, which actually, to be honest, it's a very, very good thing, because it prepares the market, cleans up the market for the next, to make it safer, to make sure that, you know, those guys that actually sold the story and sold the Ponzi actually get flushed out. Today, when we talk about crypto prices going up and down, you think of crypto as a business in itself, right? There is no cash flow, there is no business model, there's no profitability whatsoever. So you would liken it more to a commodities. That's why SEC took so long to try to figure out which category is crypto. Is it equities? Or is it more commodity-like in behavior? Because if you think about it, when you talk about equities, it's a stake in a business, it's a dynamic living thing. You have business models, you have profitability, you have an accounting structure, governance, all that kind of thing, you see. But for crypto, it's purely, a lot of it is driven by supply and demand, right? And maybe somewhat Ethereum has somewhat of a business model because you have to secure the network by staking, right? But other than that, I mean, I'm no crypto expert, but this is how I view it from my lens as a value investor. I mean, having lost money, having made money, then having lost money and all that. My gut feel was telling me, as a business, nope, I don't see the viability as a business, right? So that means it shouldn't be evaluated like equity. It should be evaluated like a commodity.
Okay.
Then when you think about commodity, what drives prices? Supply and demand, no? That's all only. That's why you see, since you started with the introduction, right? You said that now it's back because crypto ETFs are back. Purely because of what? Fund flow, ma. Now new money coming in, it's more accessible to people, whatever. So again, what drives equity prices, which is like the growth of a business, the growth of profitability, the growth of earnings per share, that kind of rules don't apply to crypto. It will apply more to like something like a gold, a silver, a commodity type asset class, right? So really, how they create supply. You mentioned just now your friends NFTs and all that kind of thing. So you need to create an ecosystem, you know, Louis, an ecosystem where there's chances for people to make money. There's also chances for people to spend money. So only then they create supply demand, mah. Because some people who are savers, they will come in because of the yields, your staking, your farming, you get this kind of yield percentage, whatever, right? There are some people, newly minted wealth, instead of taking it out, some of them want to evade tax, right? Instead of taking it out and spending in the fiat currency, they need to spend it in the crypto world, so that's why the NFTs, a lot of other things that can be bought, you see. So how do you create the ecosystem to drive prices up and down is really must be spending avenues, must be debiting avenues, must be ways to earn money. So I've just kind of give you an overview of how I look at it from 50,000 feet. And having been there, I went down a rabbit hole, Louis, trying to understand game theory, because in crypto you have to understand, right? It's not easy to understand game theory, but you have to understand game theory, you have to understand economics, driving forces, you have to understand like the technology behind it, which, to be honest, right, sometimes all of this is fluff, And I got enamored by the tech that I actually shut my logic, I shut my gut, and I used too much of my logic brain, and also because of greed. That's why it's like, okay lah, I may not understand it fully, but I kind of get it. So that's it lah, you see. So I hope you understand ecosystem, spending, debiting, making money, that all drives supply and demand.
But yeah, I mean, although I mean, yeah, we like to compare Bitcoin with something like gold, right? Commodity, but they're not exactly the same, right?
No,
I mean, gold is more tangible. There's actually an actual physical usage which has been around for centuries or maybe like millennia,
precisely.
right? Then we have Bitcoin, which is like, well, it's a little bit complicated as well, I think.
Yeah,
Right? Like
yeah.
what you described, I'm sure like we have half the audience would just like glaze over this whole technology thing.
Yeah, exactly.
Yeah. They don't even know, like, okay, maybe someone tells them, you know, the Bitcoin went up, then you have all this FOMO, right? Around like, oh my. There's, I think, inherently less risk in buying gold in that way than Bitcoin. So what I mean, what will determine, like, what are the some of the risks that people face when they want to invest in Bitcoin? What I can think of is, what if Bitcoin gets replaced by
Where is the governance structure around Bitcoin or crypto? Don't talk about Bitcoin specific. Crypto as an asset. Where's the governance structure? Now, the word is so simple, right, Louis? But it's this. So I love to analyze disasters. That means even for me, when I lost in the Terra Luna crash, I look back at it, the governance was so lacking. And don't talk about it. At that time, the gold standard, they said of all of these, right, FTX crashes, Luna crash, whatever, the gold standard was Binance, and Binance has also fallen.
Yeah.
Okay,
right.
so come back to the most basic word, governance. So what does governance mean? Governance means that whatever ecosystem, money ecosystem. Okay, money. I just use the word money lah broadly because money means you can buy, spend. You know, there's a utilitarian tool for it. Whenever there is a money system, somewhat, I think key to all this is trust. How do you know Bitcoin has value? Is actually people has to trust in that system. Only then it creates value, correct? But how do you create trust? Is actually through a more transparent governance system. Now, I'm not saying the fiat system is perfect. You know, in today's banking world, the rich get richer. You know, your Rockefellers, your Rothschilds, your even guys like Larry Fink, you know, king of BlackRock, right? They control, in a way, the fiat system. And the crypto was designed precisely to fight that system. But it also creates tons of loopholes. Where are the accounts? If you studied the FTX scandal, right, it's virtually blank checks, you know. 2-3 people, teenagers in a room, moving billions of dollars with no proper check and balance system. That's governance to you. Binance, even though, you know, I've met CZ, you know, I've even taken a selfie with CZ before, right? Of Binance, right? Again, when you dig through the layers of curtains, where's the governance system? There's no such thing as a proper check and balance, right? Even within our fiat industry, with that check and balance, some loopholes happen. Just imagine without, we had the 1MDB scandal, right? Moving money, but the system was there, but the people around the system was actually manipulated to fraud. But the system was there. Crypto is zero. It doesn't even exist. That's why you talk about as an asset class. That's for me is the first risk. The second risk that you brought about, whether replacement, whatsoever, again, money has evolved many times. I mean, people in the Egyptian days in China, you know, what do they call it? You know how the old Chinese guys, they used to carry pails of like the money bag, right? They call it the money bag inside that. Yeah. So over these centuries of change, whatever, the premise of using a tool, which is in broad form, we call it money, is always about a trust-based system. So that's why in terms of replacement, anything can replace money as long as there's a few criteria. Trust system, an ecosystem of spending, there's a supply and demand, governance, or that kind of thing. So as an asset class, I think unless they get more and more into that governance structure, which defeats the whole purpose of decentralization, all that kind of thing, right? Then only I feel that the risk is the risk for crypto. So if you ask me, it's like super risky because it's a question mark.
Yeah, and I think great that you brought it. It appears like the more transparent we want to get with crypto, the less we transparent it is actually for the general public who actually don't understand how it works. So for someone who actually wants to invest in crypto, somehow they don't want to, like they fall into FOMO or whatever, like, okay, how do they evaluate like cryptocurrencies in general? Like you mentioned, we cannot really directly apply value investing principles to cryptocurrencies. You have to treat it like a commodity, somewhat like gold, but yet gold is tangible, Bitcoin is intangible. Is there actually a way to evaluate, or is actually purely speculative at this point?
Okay, there are certain cryptos that may have a way to evaluate. So I'm actually quite a big fan of Ethereum because I feel there's a real world use case. There's another one which is Solana. So if you heard of this coin called Solana,
A little bit.
what? Yeah,
Not
a little
very-
bit. So yeah. So you in crypto, right? You have to understand the coin and the technology behind it. So for me, I was more enamored towards the technology behind it because Solana and FTX at that point of time, they were among the two fastest networks in the world that can actually process transactions up to 50,000 per second. So
Wow.
just to give you context, MasterCard, Visa, their payment networks is one of the most secure and one of the fastest in the world. They can process about 50, 60,000. Bitcoin can process probably 4 per second. 4. That's why you see Bitcoin, if you transfer Bitcoin, right? I don't know how often. I was into the weeds for 3 years, Louis. So we compare, right? You transfer 1 Bitcoin, if you don't pay the maximum gas fee, you probably get your coin 1 day later, half a day later. Seriously.
Wow, that sounds a bit worrisome.
Yes. So for other alts, even Litecoin, they claim to be, because it's above the network is above the Bitcoin network. It used to be faster. Okay, so alternatively, how do you access, to your question, how do you access and all that kind of thing? I think you really have to understand the ecosystem that they're trying to build. And for me, second thing, which is very, very hard, even in equities also, we also find it hard, is to evaluate the people and the team running behind it. Now, you see, I don't know if you heard of Celsius.
Yes.
Yes. The whole thing collapsed also, Alex Mashinsky, right? When during Celsius heydays, right, people were praising him and said, oh, very transparent, they go FINRA, and today it's like the complete opposite. So did those guys do their due diligence? I think so. And can I blame them for not doing it? I can't. They did it, right? I was putting money in Celsius for a while, but for me, not because I didn't trust him, but because I found other places where I could get a better yield for my farm and all that kind of that I move out from Celsius. But I look at it, right? That for me was very, very difficult. How to access? Even for me as equities, I meet some of these owners, and probably only over time you see their actions speak louder than words. Only then you know that you've got a feel of this guy. You see, so as an asset class, I don't see public reports, governance, and all that kind of thing, unless they start publishing an annual report every year, which I don't think they won't because they want to believe in this decentralized system. Second thing is, do you understand it as a business? How does it make money? How does it create more value in the future, right? So is it through transaction fees or whatever? So you have to understand that. Third, how do you assess management? So again, I'm applying the lens not just for investing in equities. I'm applying the lens for investing in any asset class. As a commodity, why is it more valuable in the future? Is the demand for jewelry in India going to rise? That means people need to mine more, and then now the supply is getting down. That's why there's going to be arbitrage in price, all that kind of thing, you see. So all that applies anywhere, any asset class. The rules of the game are, I would say, 80-90% the same. If people want to argue with you otherwise, I don't think people will after this crash. In the past, I think if you talk about 3 years ago, they'll say you're stupid you don't understand you see this guy. Yeah, you live in the past, right? Okay. Time and time again, Charlie Munger, God bless his soul, and Warren Buffett has been proven right many times. So now I look back at my own mistakes. It was actually my gut telling me, these are the questions I asked myself. Where's the governance? Where's the business model? How do I trust this guy? You want to go in virtually when you're putting money, you're technically getting into bed with someone,
Yeah.
And and how do you assess that? Is the guy holding a knife next to you when you go about to sleep? You don't know. You see, you have to understand that, lah. Yeah. So alternatively, I think what we have tried to advocate. I understand stocks is difficult, right, Louis? And thanks to you, you kept on, I wouldn't use the word pressure, but you kept on asking me insistently this question that what are the alternatives? And I think that's the reason why we believe in what the smarter people than us has told the market, but no one's listening, which is buy the broad-based index, buy the market. It's so simple. Professional fund managers will shun it because it takes away their ability to make money. People of other asset classes say it's so simple, can make money, man? A question mark, right? And that's where we created this thing called our ETF compounders, because we believe, based on my experience and your experience, like trying as a newbie trying to get into the market, my experience of training more than 7,000 people, that there is a simplified way of making money. It's just that there is no incentivization for people to actually run a program and to teach. And that's why we feel very strongly about it, Louis.
Yeah, correct. So this is a program where we guide beginners like you. If you think, okay, after listening to this whole thing about cryptocurrencies is a bit too risky, and yet when you put your money in unit trust, you don't really see the performance return. Or like putting in FD, obviously, you won't see much, but it's very low risk. What if we can combine these two? Okay, we have the unit trust, which you don't have to come in and manage the portfolio yourself. Plus, not that risky, you can just leave it there and then sometime later, hey, it's still okay. That's what following, like just matching the market does for you. This is where we will come in to guide you to how to do it, what kind of ETFs you can invest in. So if you're interested in this program, make sure to leave your email in our ETF compounders waiting list. For everyone in our waiting list, we'll give an extra discount. Okay, so make sure you put it in. Don't wait for the launch. Make sure you put your email first. All right, so I think that wraps up today's discussion. Anything last words, John, from you?
I think it's what you what you see and what you hear outside. Let me just be upfront and honest with you. I mean, I've started investing 2008, 2007 when I think there's a word for it, zaman jahila lah. Jahila means you're in the dark ages, you don't know anything. Okay. I don't know if you remember your sejarah, Louis.
I do.
And I look back, right, from that day until today, 99% of what you hear in the market is actually noise. Only 1% what you hear is really information and fact. And you have to, how do you get better is you have to develop the skill. It's as simple as that. Regardless of equities, property, whatever lah, right? Develop that skill and be in that 1%. So you learn to differentiate the 99% and the 1%. And I hope that if you don't remember anything of what both Louis and I said in this episode, you take away understanding this is more than enough for me.
Agree. All right, so that wraps up today's episode of WangHiro's Personal Finance. So over to you. How much of your portfolio is in crypto? Are you worried or are you still bullish on the prospects of crypto going up and up? Comment below. Like, subscribe, and hit the notifications button for more updates from WangHiro. Thank you again from both of us, and see you again in our next episode. Bye-bye.